Today's Animal Spirits is brought to you by our friends at Masterworks. On last week's episode, Michael and I talked about hedging against inflation and how some of the simpler hedges are actually the best ones, like owning stocks, and some of the more complex ones, like shorting bonds and owning gold, haven't worked as well this time. Well, our friends at Masterworks sent us some data that shows that contemporary art actually has a high corresponding return to higher inflation. And this makes sense when you think about the fact that, one, it's a real asset. Two, there is no yield. So the reason that bonds tend to do poorly when inflation is rising is because the periodic payments you get for interest are worth lower to you over time since those payments are set in stone. The other thing that makes sense why art would do well in an inflationary environment, the Fed is going to keep rates low for a long time, they've said. That money has to go somewhere. Guess who has the money? Wealthy people. So as a hedge against inflation, you own real assets, and contemporary art is one of them. So if we go back to 1985, the average inflation rate is roughly 3%. When that inflation rate has been above 3%, you can see some of the best performing assets have been contemporary art, emerging markets, REITs, S&P 500, and gold. But the best one is actually contemporary art. So go to masterworks.io/animal to learn more about investing in contemporary art and why it could be a good inflation hedge. Welcome to Animal Spirits with Michael and Ben. I want to read you the last 12 years worth of S&P 500 annual returns, calendar year.
Cherry picking, are we? We're starting the show that way?
Yes. By the way, I tweeted this out yesterday, and someone goes, "Oh, so I see you didn't include 2008 in there," which there's a reason for that. Moron. All right,
go ahead.
2009, 26%. 2010, 15%. 2011, 2%. 2012, 16%. 2013, 32%. 2014, 14%. 2015, 1%. 2016, 12%. 2017, 22%. 2018, the only down year, down 4%. 2019, up 31%. 2020, up 18%. 2021 so far, up 18%.
I need more.
Okay, you want more? Here are the
No,
returns.
I want bigger returns. Give me more returns.
Okay, NASDAQ.
Not good enough.
Listen to the NASDAQ 100. 2009 to 2021.
All right.
Real quick. 55, 20, 3, 18, 37, 19, 10, 7, 33, down 10 basis points was the one down year. Up 39, up 49, and up 18. So the NASDAQ has obviously done way better.
18?
39, 49, 18.
But Ben, the denominator is fiat, so.
Yeah. Divided by the Fed balance sheet, and we're way lower than that. As
all right,
millennials,
so what's your point? What's your point?
Is this the best stock market environment we are ever going to live through? That's possible, right? Is this as good as it gets?
Honestly, I would say greater than 50% chance that yes.
I think there's like an 80% chance this is the best stock market. And when I put this out on Twitter to people and I said, is this the best millennials are ever going to get? A lot of people came back and said, well, great, this is awesome. Millennials didn't have any money, so they couldn't take advantage. But I would counter that with saying...
That's not true. It's just not true.
I don't think so either. And obviously, you had the 2000 to 2008 period where stocks were down 4 out of 9 years, and almost all of those losses on calendar year basis were double digits. You had a 12% loss in 2001, 22% loss in 2002, and a 37% loss in 2008. So obviously this last period made up for that awful 9-year stretch or whatever it was. So,
well, how much money did millennials have in 2008? $0.
Apparently that's what people are telling me. But you could make the case if the next 10 years from now is awful or sideways or whatever, we have a few crashes, that is a better environment for millennials to be saving than the current one where stocks have gone up a lot. Because millennials are still going to be net savers. So I'm the oldest millennial in the world at 39 and 11 months in 2 weeks or whatever it is. I'm counting down to 40. I still have time until I need this money. I still have, 20 years to save for retirement, 25 years.
At this point, a stock market crash would be a good thing for us.
Yeah, even if markets go sideways and do nothing for 10 years, for me as a net saver, that's a positive. So that's almost a better scenario for millennials than stocks just going up every year.
If we do get another big stock market decline, you can already see the headlines now about millennials getting screwed. I was going to talk about this later in the show, but let's just fast forward. There was an article in the Times a few weeks ago. The headline was "A Struggle for the Millennials," with the subtext, if you're in this generation, you face 2 financial crises before age 40. and I guess they count the last one, this most recent one, and you probably have the depleted or zero retirement fund and higher debt to show for it. Really? So these are two quotes from the article. So this kind of pisses me off because this is just screaming for a headline, clickbait. I mean, there's just nothing in here. According to a survey released in December, 15% of millennials said they had taken an early withdrawal from a 401k, compared with 10% of Gen X and 4% of baby boomers. All right, so I mean, is that big of a catastrophe? I mean, certainly for the 15% it is, but to represent an entire group of people in distress or duress, it's not fair. And then another one, they're talking about they find a person to zero in on, and they said that she's skeptical that any social safety net will be intact at all by the time she reaches retirement age. Here's a quote. With the way Social Security is going, she said, and especially this pandemic, I don't think it's going to be there in 30 to 40 years. A lot of the retirement has to come from my own legwork. Otherwise, I'll be working till I'm dead. I mean, come on. It's just nonsense. It's just, yeah, some people have it rough, but some people always have it rough. Millennials don't have it worse than any other generation. And in fact, you can make the case that things are pretty okay for us. I know you're like, when you're talking about generational thing, it just sounds ridiculous because you're talking such generalities, right? Like,
especially someone who is 25 right now versus someone who's 40 are in completely different stages of life, right? And certain people, you could argue that like the tails now are you could always find much worse on like the left tail of people doing really bad because they made decisions they thought they were supposed to make and they took out all the student loan debt and it didn't work out for them. And now
I'm bored of this topic. I feel like it's enough already.
Yeah. Okay. So another crypto weekend out of the insanity. There was a huge gain on a Sunday for apparently no reason. Reading the Yahoo Finance.
Well, hang on. Let me just push back a little. Are there declines for no reason? I mean,
oh yeah, of course there
are.
Do
we need a reason?
No,
yeah,
I just.
Do we need a reason for everything?
Well, I mean, if crypto is up 12% in 2 hours on a Sunday, it's funny to me. Like, so you read what happens to the stock market on Yahoo Finance after like a down 60 basis point day or up 60 basis points, and they get they give you the reasons, and it's like the Fed said this, so stocks fell. But with crypto, it's even funnier because the gains are bigger. But so they had this profile in the New York Times recently about the guy who founded FTX. So he's been on a few more podcasts and stuff lately. This Sam Bankman-Fried, and the guy's like 25. He looks like your typical schlubby Silicon Valley guy who his hair's all messed up and he has a hoodie on and mismatching socks or whatever with Tevas, but he's worth like $12 billion or something. And they talked about the leverage being used on FTX and Binance and BitMEX and some of these places that aren't even in the U.S. yet in some cases. So they talked about that 125 times leverage that you could use. And I think once this came out, all these places said, okay, if we're ever going to be in the U.S. and get big and be okay with the regulators, we have to limit it. So Binance and FTX decided, all right, we're going to put a ceiling on this leverage. Now you can only use 20 times leverage. And it was just hilarious. It was just hilarious to me that, 20 times, all right, we don't want people to totally blow themselves up, so let's just let them lever up 20 to 1 and not 125 times to 1. That seems reasonable, right?
I don't know anything about the breakdown of people taking advantage and who's using this much and that much. I can't imagine that many people are using 100 times leverage, or even 20 times.
So here's
because you will blow up in 30 seconds.
But my point is that there obviously is more leverage here, so that these huge moves, like we see an Elon Musk tweet, and we go, how the hell can that move so much? It moves a lot because people are levered in either direction. So he tweeted out a tweet storm about why they did this, and he said the average leverage used on FTX is 2 times. So it's not like people are being overly egregious with it. That still seems like a lot, but he says at FTX, way less than 1% of volume comes from margin calls. So it's not, but they did say in this New York Times article, on May 18th alone, there was $1.6 billion worth of liquidations, and that's when you're levered up, and it goes past you, and they don't ask you for a margin call. They sell for you, right? Or they buy if you're short. And it says collectively there were $20 billion in forced liquidations in mid-May. So that's how you get a 50% crash off seemingly no news, is that people are way, way over leveraged and they get taken down when it finally falls. So
we hold on. We should also clarify. When we say there is news, there is not news. We don't know the news. I mean, there's stuff happening in crypto world that is moving prices.
People were ascribing this one to there was a job posting for a crypto position at Amazon.
Okay, fine. That seems reasonable. But there's never going to be news if we're talking about like a GDP report because crypto doesn't have those sort of things. So you and I don't know what's driving prices, but people that are really in the know.
No, they don't. They do not. Like we could say we know what's driving stock prices, and we still don't. This is just narratives attached after the fact.
I don't know that I agree with that.
No one really knows, Michael. There's no way. Come on.
Well, if
you think there are certain people that are like, oh yeah, this definitely did it. It was that. I mean, yeah. If Elon Musk tweets and then it moves, yeah, sure you can say that, but
okay, so that goes on.
Okay, there was no tweets this weekend though.
Well, Elon, you might have missed it, but Elon did like a 4-way call with Jack and 2 other people discussing that one of his material positions is still Bitcoin, and that might have been the spark.
Okay. I think you're giving a little too much credence to. Sometimes this stuff just moves, and once it starts moving in one direction, everyone just jumps on and keeps pushing.
Of course, there's
it's like a rugby scrum.
I'm just my only point is there is news in the crypto universe that you and I are not privy to. Will you stipulate that?
I don't think so. I think we pay attention to a lot of this stuff still.
What?
you act
you
like
think you know what you.
Dude,
like we're noob whales. We don't know anything about crypto.
So is there like a beige book for crypto that we're not like privy to? Come on.
Yeah. It might even be rainbow.
Get out of here. If you have access to Twitter, you have access to all the news that everyone else is paying attention to, and it's going to surface in one way or another if something really did move it.
All right, that's pretty fair.
All right. Here's a good question from a listener. Speaking of crypto, I'm a millennial, first-time home buyer with 1 kid, second on the way. Currently live in a 2-bedroom apartment. Would like to upsize with a growing family. In normal times, this would not be an issue as I have a pretty good income. The issue is I live in a super high cost of living market in Canada, which, by the way, we've gotten some emailers from Canada being like the whole hold my beer thing. Like, you guys really think you have a bubble in the U.S.? Look at Canadian real estate prices. He's saying that a 3-bedroom fixer-upper is probably in the range of $1.8 million post-pandemic. Said it's barely within reach of my current income and requires a big down payment and closing costs, probably something like $500,000. Said he did some...
Where is this, Vancouver?
I'm guessing it's got to be Vancouver or Toronto. Did some crypto mining back in the day and currently have around $400,000 worth. One thought is whether to sell it and use the money towards a down payment. 2 things that hold me back are, 1, I think with my current income, I will eventually be able to save up enough for a down payment. 2, loss aversion. I used a double-digit number of Bitcoin back in the day to buy computer parts and would like to avoid repeating the same mistake. So this is like the crypto pizza guy kind of. What would you guys do? Sell crypto and put a roof over my family's head, hold crypto forever and avoid buying into a housing bubble, wait it out, and maybe try to rent something bigger in the meantime?
Dude, I'm not giving advice on this question. No way. The stakes are too big.
Okay.
We're going to be responsible for this guy's life?
No, okay. So here, I wrote a framework for this a few months back when I said, like, probably, let's say you have a big winner in NVIDIA or in Ethereum or whatever before it tanked, and what do you do with that? So I put together 5 questions.
By the way, before you get to your questions, let's also say he had 400K. Now he's got probably 450, 475.
Well, it depends when we got this email. More. It could be from 400 to 200, depending on when we got this. It might be an old one. Okay, so first you say, why did I buy it in the first place? You and I have talked about with Bitcoin. I basically bought it with the understanding that I'm more or less never selling it. I don't care what happens. I'm not going to sell it. This is like a forever holding for me. If I need to get liquidity from somewhere for an investment, it's probably going to come from somewhere else. This is a buy and don't, just leave it alone, out of my mind. It's out there. Okay, number 2, do I have better use for this money? Like Jim Cramer said, he sold his Bitcoin a few months back and paid off his mortgage. If this person with 2 kids and a wife decides to sell their Bitcoin and then they buy a house with it, do you really think they're ever going to regret that purchase? I mean, if Bitcoin is at 200,000 or whatever, and they say,
honestly, yeah, they will.
Potentially. All right, 3.
It'll take some of the edge off, but they'll regret it.
Okay, one more. Are there better investment opportunities elsewhere? You could say that buying into Canadian real estate right now is not a better investment opportunity.
Dogecoin.
But you probably could have said the same thing about Canadian real estate 4 or 5 years ago. 4, what does my investment
right.
plan say? I don't think this one really, this is more finances versus portfolio. I think there's a difference there. And then 5, what would bring me more regret? Buying a house or and selling out of crypto, or holding
Losing it
crypto
all.
and not buying a house. Let's say it takes you 2 years to save for down payment. What would you regret more? Missing that time in a house and potentially housing prices continue to go up, or selling your Bitcoin and Bitcoin prices go up more? I think that's a tough question to answer, obviously.
That's always the best framework, is regret minimization. Because what if you wait 2 years, and this is possible, what if you wait 2 years, you build a bigger nest egg, and then crypto crashes, and you're like, I just wasted 2 years of my life.
Yeah, and at that point, let's say housing prices in Canada are up another 15%, and you go, well, now it's got to be bigger.
There's no easy answers, but I think that you provided a nice framework. Good job, Ben.
That's the idea. I'm not, when you're in our position, you cannot give specific advice to everyone without knowing everything about them, but you can provide like a good decision-making framework. I think that's the point.
Can we just stick with this crypto thing for a second? So Mike Polakar tweeted this. It was an article. It says, this article says someone spent 160,000 hours researching all things Bitcoin. How is this possible? So this made me laugh. 160,000 hours is, if my phone is working properly, that's 18 years. Crypto has been around. Crypto hasn't been around for 18 years. So you got to
cryptography.
No, I know it's got to be time dilation in the metaverse.
We weren't. So I'm reading what's the space book that we were both on? Project Hail Mary.
Project Hail Mary. Are you done with it yet?
Well, he talks about relativity. So maybe he's in another dimension, and
it's got to be
kind of like Interstellar,
fair.
Where every 7 minutes is 7 years or whatever.
Fair enough. Although this guy, jokes on us, he put 30 grand into his Bitcoin IRA, and now it's worth like a couple $100 grand. So there you go.
All right, all that studying paid off.
Anyway, where are you in the book?
I'm about halfway through. Spoiler alert, he just made contact with the aliens.
No spoilers.
Sorry. Okay.
Well, you can't say spoiler alert and then half a second later. Come on, man. Etiquette.
All right. I don't think I gave away too much there.
Oh, wait. I have one take I want to present to you. There's some people saying it's not going to be Bitcoin because it never works out that way. You had Netscape and you had MySpace, and it's never the first thing that comes on the scene. I feel like people are a little bit too certain in that assessment. Like, what if Bitcoin has such a first mover advantage that Bitcoin is it? What if this is it? And I'm not like saying that that's going to happen. I'm just saying I don't think you could be too dismissive of that as a possibility, that we just know something's going to come along better because that's what history has shown. I don't know that to be true.
I do think it's hard when you try. And I think the other thing people used to say about Bitcoin is Bitcoin now is where the internet was in 1995. Like that was the thing people said in 2017.
That's too convenient.
Right. Because guess what? Back in the late 90s, people weren't saying that stuff because just no one knew. I think I agree. That the historical analogies thing, that's really, really tough to put in here.
What did you do to celebrate?
Celebrate what?
The end of the recession.
Oh. I think that's probably the point where you and I stopped doing 2 podcasts a week with each other. Correct? So
that was a lot.
The National Bureau of Economic
Credit to us.
Yeah, that first 3 months or so of the pandemic, it still feels, that period felt like the first 3 months of having a kid, right? You have like adrenaline pumping. You're not sleeping very well. It's all kind of a blur looking back on it. Doesn't it feel like that whole period was just sort of a blur, right?
It really was. It really, really was.
But looking back, it was.
What did I do last May?
But I mean, it was scary. It was exciting. That was just a bizarre time. I think when we look back on it, like right now, it just seems like because we're just kind of getting through this stuff. I think people are going to look back on that, and it's going to be just a weird time in everyone's life to think back on.
Yeah.
All right. So the National Bureau of Economic Research says the U.S. recession lasted 2 months, ending in April 2002, proving once and for all, the Fed and the government never run out of ammunition, right?
Yeah.
It's impossible. Stop the depression in its tracks.
Can I just say one thing? I forgot about this. You were right about Coinbase. At least so far, Coinbase is shooting up today. along with the price of Bitcoin. So maybe you were right.
Oh, the correlation of Bitcoin and Coinbase? Okay.
Yeah, maybe I was on the other side of that. I think it will. I was wrong in the short term, but I think in the long term I will be proven right. I think that they will go their separate ways eventually.
All right. I don't think so. I think anything crypto right now is just it's moving in stages together.
Right now. I'm fast forwarding. I'm zooming out.
Okay. We'll see. All right. This one from Bloomberg. Through a combination of savings, borrowing.
Sorry, hold on. I cut you off. Do we have anything to add on the recession being ended in 2 months?
No, I just think if you would have told someone before it happened, global pandemic, basically people are going to stop buying stuff, stop going to work, stop doing all this stuff. We're going to shut down manufacturing plants. The government is going to try to plug the leaks. They would have given you the meme of the guy slapping the thing on the water tube, the infomercial guy, and then the hole going through his hand with the water.
Yeah.
People would have said, "You're nuts." No, the government. People were saying it at the time. The Fed can't stop a pandemic, and they didn't. But they can shore up an economy, and I just think something we learned about Americans is just we love to spend money. So if we stop spending money on experiences, we're going to buy a shitload of shoes or trampolines or pool or beer, whatever it is. We love to spend money, and I don't know that you can ever just beat that out of us. Here's how parents are spending money in one way. This is from Bloomberg. Parents are now footing about 54% of the bill for tuition, room board, and other expenses for college, according to a survey out of Salem May this week, up 2 percentage points from the year before. Families paid an average of just a little over $26,000 in 2021 school year, according to the survey, How America Pays for College. Basically saying parents are paying most of the bill for college these days, not the kids. So a lot of parents are probably tapping into retirement savings or their own savings and putting their financial needs on hold to take care of their children's college expenses.
Wait, is the equivalent of putting on your oxygen mask, you should be taking care of yourself first.
Yes. That's the general personal finance rule of thumb. Don't let your kids take out loans. Figure out your own retirement first, because guess what? If you don't have your retirement figured out and you're paying for your kids' expenses now, they're going to have to take care of you someday anyway, probably. So it's probably better off to
So it's a wash.
Yeah, it could be.
What have you thought about what you want to do for your kids' education? In terms of do you want to pay for half of it, or because I haven't honestly, I'm contributing to their 529s, but I haven't really thought about how much I want to pay.
That's about the extent of mine. Like my dad left me on purpose with enough loans where I would have to pay them off. I think I owed $25,000 after college, and I think he did that purposely. And I think he did similar amounts for my brother and sister, even though we went to different schools. And I think he wanted us to have some skin in the game and pay it off on our own a little bit. But the funny thing is,
that's where I'm at.
We never really talked about it. But yeah, I mean, I guess you could say, I like the idea of hey, we'll pay for a state school, or if you go to community college for 2 years, you can get the difference. We'll pay you $10,000 a year or something. If you go to a private school, we're going to pay up to this. I think it makes sense to have that talk with your kids at least to know what they're getting themselves into.
Well, I haven't even had that talk with myself yet.
No, honestly, I'm like you. I'm saving in a 529 for each of my kids, and I started when they were born. But
that's okay. Our kids are so young that maybe in 10 years I'll have a better sense of how I feel. Maybe if they're good kids, I'll pay for the college.
I still think that was one of the worst takes of the entire pandemic was this is the end of college as we know it. I think if anything, it's going the other way, where kids are now going to realize how important going to a college campus is, and that the whole learning remotely is not conducive to a good college experience. Like if I could bottle up that first 3 or 4 weeks of college as a freshman going away and have that feeling to sell to someone, that's like one of the greatest experiences that I've ever had in my life, right? Like first time going away from home. Oh my gosh.
I would like a mulligan on that one.
Okay. You're a college. All right. I think I've heard the stories. All right. Moving on.
All right. Bill McBride wrote, several metrics indicate that demand is softening. I mean, the market is still broadly strong, obviously, but he showed a chart of Realtors Buyer Traffic Index. He compared April to June, and it's still, obviously the market is still super firm, but might be softening a little bit. I'm seeing it. I think we spoke about this with Ben Miller on Fundrise from our conversation on Monday. Anecdotally, I'm seeing it, and I know my town is not the entire United States, of course, but I'm seeing a lot of price cuts because people got people went overboard. Like they were like, oh, houses are selling for this. We're going to continue to raise prices. And now it's going the other way where I'm seeing house cuts all over my neighborhood.
All right,
what do you say?
I have to quibble though with your assessment of this.
Quibble.
You said you asked him, do you think housing prices have peaked? I think this is like a way of looking at disinflation. So you go from inflation of 5% to 3%. Inflation is falling, but it's still going up. So that's like housing prices.
Okay.
So prices are still going to go up, but the rate of change is going to slow, right? Because those people who are putting on ridiculous prices of their houses, even the prices they're lowering them to are still higher than they were worth before, probably 18 months ago or whatever.
Here's what, if I had to guess, you're right. I don't think prices are going to crash by any means. And I think it will be a temporary pullback. So here's what I see, Ben. Follow my finger. Whoop, a little dip, and then the long-term trend will still be higher.
Okay, I don't think we ever get a little dip. I think it just slowly rolls over.
I'm calling for a short pullback.
So you think prices are going to go down? See,
I do.
I don't think prices go down for a long, long time. I think the rate of change, it goes from a gain of 15% year over year to a gain of 3 or 4 or 5% or whatever. But I don't think we're going to see
and then flattens out.
I don't think we're going to see a decline for a long time. That's my thought.
Actually, you know what? You may be right. I think because you're right. I don't think that prices are going to. I don't think that prices that are actually. I don't even know what I think. No, I do think they're good. No, after arguing with myself for the last 10 seconds, I do think they are going to pull back a little bit.
All right, you're calling for a correction in the housing market. Honestly, look,
calling for.
We're in.
I'm not shorting houses.
We're in uncharted territory here, but it's very rare for a correction in the housing market. I will say that. It's also rare for them to go as high as they've gone in such a short period of time. But
yeah, honestly, I think the data's on my side, not yours. When you say it's rare for houses to pull back, yeah, it's more rare for them to go up 30% in a year.
True, that's fair.
All right. Anyhow, we've been speaking a lot about like all cash offers, and we had an email come in. I work at a bank that has predominantly wealthier clients from mass affluent on up, and what we have seen over the last year is a lot of mortgages for younger buyers with wealthy parents. The strategy results from the knowledge that in uber competitive bidding, they are more likely to get the house with an all cash offer. The parents buy the house for cash and quick claim the deed to the kids. The kids then come to the bank to refinance and pay back the parents. These will show up as cash purchases, but in the end, really aren't. There's some amount of that messing up with the numbers. So this was interesting. I don't know how meaningful this is, but it's certainly happening. I mean, I'll take this guy's word for it.
This is the reason wealth inequality continues to get worse, because we have parents paying for college for their kids, which obviously not everyone could do.
It compounds.
And then you have parents who have the ability to do this for their children and help them get a house, when people without the means to do that cannot do that same situation. So this is why it gets worse, and you see the spread widen.
Meanwhile, my bank asked me that they said they're having trouble verifying my wife's income. I'm like, I gave you 4 paychecks, and what do you need? So I just wrote back, LOL. That's where I'm at.
I don't know, why can't it be like doctor's records, where if you do this once for a mortgage and they ask you all these questions, why can't they transfer those records to if it's the same bank with a refi or the next bank?
Dude, that's hilarious. I sent the pay stubs in February, in April, and now in July. It's a joke. All right.
So you mentioned our talk with Ben Miller at Fundrise, which we've done a couple times, and I asked him. A lot of people say, well, the reason that institutional buyers are so bad for the market is because they don't have any price discipline. They just pay whatever they want, and they can outbid anyone. And I kind of asked him about the price discipline, and he gave an interesting answer. He said, we're not competing against, when we buy existing homes, we're not competing against other single-family home buyers. We're competing against the bond market. And that's why I think, people for years have said, just wait until rates rise, and that's going to screw up everything. The housing market is screwed, stocks are screwed, bonds are screwed. Once rates rise, that's one possibility. The other possibility is rates stay low or not go up for very long. Doesn't that put a floor under housing prices for a long, long time, where if these places are getting 5%, 6%, 7% cap rates on rentals, then they're just going to continue to buy? Like, these places aren't all of a sudden going to stop buying houses, right?
No.
Right. I just think it's just gonna keep happening. So this is the Wall Street Journal wrote another piece on this, and like they're talking about the evidence of crowding out. They said institutional buyers bought just 1 out of 500 homes sold in the 12 months after COVID began. So obviously not a huge part of it.
One out of 500.
1 out of 500. So yeah, pretty small amount, obviously. The submarket for rented single-family homes alone is worth $3.1 trillion, according to this Amherst Capital. 40% larger than the value of all U.S. offices and more than triple the value of all the country's hotels. This is just a completely untapped market for, and they're saying their annual returns they're looking at like 6 or 7%, especially with like an inflation kicker where you can raise rents over time.
Right, so it makes sense. They're competing with bond yields.
Yes, which remain low, and even if they tick up a little bit, this seems like a place where the future is just going to be one of more professional investors in this space, not less. All right, survey time. This is from, Survey Center on American Life. The number of close friendships that Americans have has declined over the past several decades. So the number of people in, 1990 versus 2021. Percentage of people who had the following number of close friends. 10 or more, 33% said in 1990 they did. Just 13% have 10 or more friends in 2021. And it kind of declines from there. This might be just a weirdly worded survey question, and people are trying to figure out the definitions of this.
You know what's interesting? Most of these numbers match up. The only one that's like a really stark contrast is 10 or more.
Right.
Like if you look at, right, like so 8% in 1990 answered that they have 4 friends. It's 11% today. So the numbers don't diverge that much, but this one is the 10 or more. A third of all people in 1990 had 10 or more friends.
Yeah, it'd be interesting to see if they put this as acquaintances, because don't you think people have more acquaintances now because of the internet that aren't really their friends, but they don't hang out all the time, but they probably feel like they know them?
There's a crap survey. They should have tracked people from 1990, the same people, to today, and asked them the same question every year.
Okay, but here I see this as progress.
Why?
Because the older I get, I don't need as many friends, right? I'm actively trying not to make new friends now. Isn't that a thing you do as you age? I feel like the hurdle is way higher to become a friend the older you get. Just because you don't have as much time to, like, back in college, you had all the time in the world to do nothing. Now you have more work responsibilities, you have family stuff. Like, I feel like that, like, every time you see, so let's say you see an old college friend or high school friend at, like, your kid's soccer game or something. Every time you go, oh, hey, man, we should get a beer together sometime. Does that beer ever get drank? Of course not. I think both sides know that's never going to happen, but you say it because it sounds good.
Yeah.
Right? Whereas in college, it would be like, let's go get a beer now. And you go, okay, let's get a beer. Right? So I think that's showing progress in the world, right? You have more meaningful relationships and fewer of those acquaintances.
So, Ben, you were right on Coinbase. But with the crypto stuff, but you were also wrong on the Coinbase. I should say you were wrong on Robinhood.
No. I see where you're going with this. It's not true. Not yet.
Go ahead.
You cannot claim this yet.
That's true.
I knew you're gonna.
Right.
I knew because I saw this in the doc. It says in the doc, Ben is wrong on Robinhood. I was gonna write below this. No, he's not. All right, hit me with your argument, and then I'm gonna counterfactual you.
No, you know what? No, you're right.
No,
why don't we just wait?
So they said
no. Hold on. Let's not do that. No. Whoa. Hold on. You're coming on the Compound and Friends this week. We'll do it then.
No, I'm just gonna lay out my case
because we have the IPO on Thursday.
Because I timestamped this. So they said Robinhood is coming out with a valuation of $35 to $40 billion. Coinbase right now is worth 50. And you said, okay, right. Ben said Robinhood's going to be worth more than Coinbase. He's wrong. All right. On paper. You're not taking into account the fact that Robinhood could pop 20% on the first day, 30%. Then they're worth more than Coinbase.
I agree. Let's wait till Thursday.
Right,
you might be right.
Wait till the receipts. So you put this in here from Reuters. They interviewed Vlad, Robinhood's CEO. Is apparently going to be a billionaire now.
Because the news is they want to include IRAs and Roth IRAs.
Well, I don't know. Why do they not? Maybe someone can explain this to me. Why do they not have those now? Why do so many of the fintech platforms not have the ability to do an IRA? More regulation?
I think it's a regulatory thing.
You'd think at their size they'd be able to do that now. It would make sense. But he says we see evidence that the majority of our customers are primarily buy and hold. Do you think he says that with a straight face? Like, put him on a lie detector. He actually believes, like, it's not a lie if you believe it.
Yeah, and I'm Warren Buffett.
Okay. Well,
I mean, this is...
So what's buy and hold for Gen Z? 12 minutes?
I think Well, I think they buy it and then they hold it until they sell it. That's got to be what he's saying. Like, listen, I mean, technically, you're buying and you're holding before you sell. That's what you do.
That's fair.
You buy and you hold and then you sell. He didn't say we're buying and holding forever. But, I mean, this is complete nonsense. I mean, duh. All right. HBO Max. It's going. It's blowing up. 67 global million subscribers. Actually, I think they added, now apples to oranges, Netflix is way, way, way bigger. They added more subscribers in their last quarterly report than Netflix did. Again, I know it's kind of a bullshit comparison, but I'm just saying.
They are the most high quality streaming service there is, bar none.
It's fantastic.
In terms of movies, TV shows, everything that's on there, it's the most high quality.
I don't know if Netflix is in trouble. That's probably overstated. Actually, let me walk that back. But they said in their report that they're getting into video games. I don't really know to what extent, but their number one show right now is Virgin River, which my wife is watching and she enjoys it, but she's like, this is not a good show.
It's like a show from the WB. Besides Queen's Gambit,
exactly.
What's the other, in the last 18 months, what's the best thing out of Netflix besides Queen's Gambit?
And I don't even want to say Tiger King because that's a pandemic show. Like, nobody would have watched that.
There hasn't been much.
I'm sure there's something, but off the top of my head, I couldn't tell you what it was.
Okay. I think, are people ever going to really cancel Netflix? Probably not.
They had 400,000 cancellations in the last quarter, or 700. But no.
What's the denominator there?
It's huge. It's like 200 million. All right. So we spoke about Dave Ramsey last week, and we were like sort of like perplexed as to why he would say don't buy ETFs. Ben, you actually wrote a post about him. He has the third biggest radio audience. He has 13 million listeners a week.
Yeah,
it's like blew my mind.
He has a massive audience. Yeah.
So I just want to share. I just want to read some of the comments that we got about it because we did get quite a bit of feedback about this. Hey guys, just want to give you more insight on the Dave Ramsey ETF discussion. Dave Ramsey does not care for index funds or ETFs of any kind. He thinks why settle for average when you could pick active managers who will beat the index and always stick to his quote. Your mutual fund should be returning 12% on average per year. Yikes. So it's not that he doesn't like ETFs. It's just he doesn't like passive investing. Here's another one. This is a bit more damning from a YouTube viewer. By the way, we're on YouTube now, in case, I'm sure we've mentioned that, but we're on YouTube. Dave Ramsey, in one of his rants, noted that over the years, his partner network has paid him over $300 million. So he's got like advisor affiliates. His empire works by directing masses of followers to his network. Oh, here we go. By directing masses of followers to his network of affiliated advisors who sell front-loaded mutual funds. He regularly tries to scare his followers away from low-cost ETFs. So
he's talking his book.
That's what it is.
Here's what Dave Ramsey proves, though.
Yeah, go ahead.
Like, the majority of people in America don't need investing advice. They need personal finance advice. And that's what he's done, and that's how he's locked people into his system. It's because he helps people get out of debt and spend money more wisely. That's his whole thing.
We like his debt advice, right? His snowball, that's good advice. The 12% a year investing stuff, that's a little shaky. Ben, I just want to give you kudos. You put $10,000 into Derek Thompson in like 2016. I mean, you're sitting on pretty hefty gains there.
Yeah.
So Derek was on Bill Simmons, and he's like my favorite journalist in the country in terms of his ability to, like, he wasn't covering COVID. I mean, obviously he wasn't covering COVID pre-COVID, but he was doing such other great work, and all of a sudden he's now like a COVID expert. And because he's gathering sources, but his ability to not only be an excellent writer, he's an incredible talker. Like, he kills it when he goes on with Bill Simmons. He's so gosh darn impressive. So kudos to you. That was a great buy.
All right, I'm going to cash in when he starts a Substack because Substack has got to be nipping at his heels to come to him, right? Like, that has to be coming.
I probably would have taken chips off the table like 3 years ago, but you're a buy and hold guy, so.
So last week was driving to the ATM to get some cash for the cleaning lady with my son, and on the way back we heard this thump, 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 thump. I'm like, what the heck is that? We got home, and we hear this hissing sound in the garage. And I look, and there's this enormous screw in the front tire of my wife's car. Oh, crap. So, of course, the whole tire deflates the next day because I am useless. My father-in-law takes the wheel off for me because he uses the jack. I would not trust myself to jack up a car because I'm useless.
I've jacked up a car, not to brag.
You did? I can't. Really?
I'm pretty useless too, but
okay, that's impressive. and took it to Bell Tire and thought, okay, we're going to have to spend a couple $100 buying a new tire, whatever happens. Bell Tire fixed the tire for free because it was just a screw hole. They patched it up, filled it back up with air, and fixed it, and said, basically, if you have a tire that can be repaired, we'll fix it, and that's how they get people to come back as customers. It's pretty good customer service, right?
Great business.
I never knew that.
Fantastic.
So
is Bell regional, or I've never heard of them.
Okay, it should be it's a national chain, I believe. But yeah, that's pretty good service, right? That's how they get people to come back and buy tires from them because they give free fix. It was like, how much is our bill? They said nothing. Fix it for free.
All right, so we had a listener comment. We spoke about opting out of Social Security. Somebody emailed us and said, a side note on the opting out of Social Security, we had a client opt out for a time. He was a pastor. I didn't know that you could opt out. Is that religious privileges? What is that?
I didn't know either.
Okay. And it's now evident as he thinks about retirement that it was a terrible idea. I think that if given the option to opt out, the exception would be someone of means who can afford to. For most, it would be awful, and our retirement system would be under even more pressure. That last sentence I thought was interesting.
Social Security is like the best annuity that there is, right? I don't know why most people would want to opt out. A lot of people say I could invest it better, but yeah, I think it's still pretty decent.